if we take a swing trading position after this happens, you will always make money out of it, and this is my guarantee from Mind Your Investment. Believe me, if you make loss, quickly comment in the section whenever you make a loss, and I'll come and tell you personally that where I went wrong in teaching you or you made an error. It generally doesn't happen. Welcome to mindyourinvestment.com. My name is Siddharth, and in today's video we talk about fundamental and technical analysis checklist. Now here on the screen you'll see 5 different ways of doing a check on a stock, which tells you or gives you the assurity that the stock that you invest in is suitable for investment. Now generally whenever an investor makes an investment in a stock, they either confuse a stock for long-term investment or they confuse it for short-term investment. I, in my last 8 years of being in the stock market, have done it so many times where I've invested in a long-term company for short-term and I've always lost money in it. So it is important that you understand the distinction between short-term and long-term. Long-term investment should be in those shares which you want to keep for more than a year. Short-term should be in those shares in which you want to swing trade for maybe 3 months or 6 months. So based on that, you have to have different parameters for looking at a stock. So without wasting any more time, let's quickly get started with this series where I explain individual points to you. First, I'll explain it to you and then I'll give you examples. So watch the entire video, but if you want, you can skip to different parts. And during any time of this video, if you like the content, don't forget to hit the like button and click the subscribe button with the bell notification so that you get the latest notifications from our channel about the smartest techniques of making money in the stock market. Now before we start off with this video, I have a big announcement to make. The stock fundamental analysis package, which is available on our website, has its new version available, the version 5.0. So the existing users who have purchased it, definitely go and download it on the website. This version has a lot of new features and a lot of new target price models. The forward PE model, EV model, and the forward EPS model, which is brand new, has been added to this Excel sheet. Definitely check it out. It is a very accurate way of calculating the stock's target price, and we have also fixed the errors which were there in the previous version of the Excel sheet. And if you are new to our channel and you haven't purchased the stock fundamental analysis Excel sheet, this is your time. Definitely check it out. It is one of the best Excel sheets that we have created. You can ask our users, they can vouch for it. Definitely give it a try. It's only $349 for your lifetime. Use it and get all the stocks that you want analyzed and find out what would be their target price. Now before we talk about the debt check criteria, what debt is all about a company, let's understand, because this plays a very big role if you want to invest in a stock for long term. Now generally, if you see on the screen, a company with low debt has a very low chance of going bankrupt, because if the company's debt is high, it would mean that the company has to pay off a lot of its money to its lenders or to the people the company borrowed money from. Debt or borrowing basically means what the company took money from the government, from the banks, or from the public. So whenever a company takes money for its future expansion, the company has to pay back this amount to the people it borrowed it from. Now along with that, if the company has high debts, the company has to pay interest on those debts. Think of it this way: if you buy a car on loan, you have to pay interest on those, right? Similarly, when a company takes money from the bank, public, or government, the company has to pay off interest for taking those loans. So this automatically increases the company's chance of going bankrupt and also affects the company's profitability. High debt would mean high interest. Interest goes from the revenue and the company's net profit is lower. That is why we always prefer a company which is low debt for long term, because that is a very healthy company and a very stable company. Now if we talk about the criteria that we have for checklist, then the criteria is very simple. A company's debt should not be more than 1/3 of the company's reserves. It's a very simple example. Whatever company that you want to analyze, if we just divide the company's reserves by 3, and if the debt of the company is lower than that, then we say that the company is suitable for investment for long term and it is a very nice company to invest in. These companies have very low chance of going bankrupt, which is our most important objective for long term investment. Now let me give you a few examples of the companies that we took from Screener Routine website. This is the website, which is very easy to use. You can find all the data in this website. All you need to do is just quickly go into the website, go to the search box and hit whichever stock you want to analyze. Like in this example, we are analyzing Escorts, Asian Paints and Adani Green. Whichever stock you want to analyze, you can just search there and scroll down. You'll see all the data like balance sheet, profit and loss statement, quarterly statement, all of them of a company in the website itself. Now for you to understand it easily, we are taking all the data and putting it together in this slide so that we can compare it easily and you understand why this checklist is important. So if we look at the company's balance sheet, which has only two major things that we want to analyze right now for this checklist, one is the reserves and the other one is the company's debt. Now here you'll see Escorts has a reserve of 5,227 crores and the company's debt is only 61 crores. So if we do a 1/3 of the company's reserves, it is 1,742. So automatically we can see that the company's debt is very low. And if we just compare it with the 1/3 of the company's reserves, which is 1,742, 61 crores of debt is much lower than that. So this automatically fulfills our checklist criteria and we can say this stock is very safe for long-term investment. Escorts Limited is a company that manufactures tractors for India and it's a market dominant in that segment. So this company having a big production line has such low debt, which is a very nice sign for a stock for long-term investment to keep in our portfolio. Now let's look at another company. This is Asian Paints. Asian Paints reserves is at 12,710 crores. Company's debt is 1,093 crores. So if we do 1/3 of the reserves again, we see that it is 4,236. So again, we can see that the company's debt is lower than that. So again, Asian Paint fulfills the checklist criteria that we have for debt check. Now if we look at another stock, which is Adani Green, this company had its biggest rally in the stock market in the past 7 to 8 months. It went from 120 rupees a share to 1400 rupees a share in just 7 to 8 months. And the reason for that we'll see as we go forward in the short-term list. Why is it that this happened to this stock? But if we talk about this company's long-term perspective and debt check, here you'll see that the company's reserves is 703 crores and negative, which is a very bad sign. Negative reserves basically means the company doesn't have any funds of its own, and that is why it's a negative amount that it's showing there. If you are a long-term investor and you want to invest in a company for long-term, these companies, no matter how much the company rallies, you shouldn't keep them in your portfolio for long-term because the chance of these companies going bankrupt increases very high. Now if we compare that with the company's debt, it is 24,209 crores. So here again, it's a bad sign for the company that the company has such a high debt. Generally in this space, you'll see that other companies like Suzlon also has such high debt and poor reserves. But for long-term investment, I would not prefer any of these companies. Maybe for short-term investment, taking the advantage of a rally in these stocks. But otherwise, I would not invest in these companies for long term because it's a very risky investment. If we want to be secured with our investment, this is not the company that we invest in just based on the debt check criteria. So it's quite obvious that this company fails the debt check criteria that we have for our checklist. Now we talk about the company's profit and loss statement, which makes the biggest impact in the company that we want to choose for investment. Now here you will see on the slide it says never choose a company which is presently making loss or poor sales. Now this is one of the biggest rules or golden rules that I follow while investing in the stock market. I would never invest in a company which is making loss presently. Had the company made loss earlier, let's say 2 or 3 years ago, I would invest in it if it's making profit today. But if the company is right now making losses, I would book my profits and wait for the company to become profitable. Because if the company is making loss right now, the market sentiment and the investors will not be willing to invest in it, and the momentum of the share will not be much. That is why I always follow this basic principle of investment. In the past 8 years, I have seen this, that always invest in a company which is making profit, and that gives you the safest return in the stock market. Now the criteria that we have for our checklist is that the company's yearly sales growth should be above 10% and the company's yearly profit and loss profit growth would be above 10%. If these two criteria are fulfilled in any of the companies that we want to analyze, we can say that the profit and loss checklist is fulfilled. Now this ensures that the company's growth in both aspects like profit and sales are growing consistently, and this gives confidence to its shareholders, and that is why the company's share price always has momentum. Remember, this plays the biggest role when we invest in a stock. Now let's quickly analyze the stocks, whether these stocks fulfill the criteria or not. So we have Escorts. In 2019, the company's sales were 6,262 crores. In 2020, the company's sales fell a bit to 5,810 crores. In 2021, the company's sales increased again to 7,014 crores. So here we can see that even during pandemic time, the company's sales were more or less consistent. Just in 2020, the company's sales fell a bit. If we now look at the company's profit, here you'll see it was 479 crores in 2019, 472 crores in 2020, and 871 crores in 2021. So just based on this number, you will see that even during tough times, this company was making profits for its business and for its shareholders. This is what I look for a company for long-term investment. If this criteria is fulfilled by any other company, I would blindly invest in those companies. And in 2021, the company made a staggering jump in profit to 871 crores, which is a lot given that the COVID situation or the pandemic situation is still happening right now. So this speaks volumes about the company, on how much the company is efficient in managing their customers, their sales and their revenues, which in turn gives them amazing profits to its shareholders. Now if you look at Asian Paint, again Asian Paint is a paint company, one of the biggest in India. Here also you'll see that the company's sales in 2019 was 19,240 crores. In 2020 it was 2,211 crores. In 2021 it was 21,713 crores. So in the last 3 years the company's sales didn't grow that much, but the company's overall structure of being consistent remained, which is again something that we look. If the company is consistent, then we can say that the company's growth will also be consistent. If you look at the company's profit now, you'll see that it was 2,156 crores in 2019. In 2020 it became 2,705 crores, and in 2021 it was 3,139 crores. So again we see that the company, even during pandemic situations when most of the people were not considering painting the house because of insufficient funds, the company managed to survive in such situations. This is again something that I look for in a company which is efficient and will give me consistent return in the share price as well, if the consistency is there in the company's profit and sales. Remember, these are all long-term criterias, and these companies absolutely nail the long-term criterias for investment, and that is why a lot of big mutual fund houses and big HNIs invest in such companies and keep them in their portfolio for 15-20 years, because they can rely totally on these stock. Now let's look at the Adani Green stock, which did its biggest rally ever since the starting of it becoming profitable. Let's see how it happened. In 2019, the company's profit was negative 474 crores. In 2020, the company's losses were minus 23 crores. So this company reduced its losses by a big margin in 2020. And since then, the company in 2021 became profitable at 210 crores. So once the company became profitable, the company's share price started going up. So it is quite evident that if the company starts becoming profitable, more investors would be investing in the company, and you have to wait for a company to turn profitable. Do not invest in a company which is making loss presently. If the loss were previous, then it is okay. Company became profitable, then you invest in the company. That will give you the best possible return from the stock. Never expect that the company will become profitable in the future. Once it does, that is when you invest in it. Otherwise, you should avoid the company, because there are 5,000 companies in the Indian stock market. Pick any one of them, but not a loss-making company from the list. So in this example, it is quite evident that all the three companies fulfill the yearly profit and loss checklist, and that is why they all are suitable for investment in long term, just based on the three numbers of profit and loss check. Now we talk about the moving average criteria, which is again very important if you want to invest in a stock, and this is the technical part of it for long-term investment. The stock should be trending above the moving average of 52 SMA on a weekly chart. This is the criteria that we have for technical analyst, because it is important that the trend has to be strong and the price of the share to be above the line. This would confirm that the stock is bullish for the 52-week period or the moving average of 1 year, because 1 year has 52 weeks. And if we use the 52-week moving average on a weekly chart, we get the entire year's average price to us, so that we can see if the share price currently is above the 1 year average or not. That is why we use this, and this is the best indicator for long-term investment. You do not require many indicators, just this alone of 52-week period is enough for you to invest in it. Now let me show you a few examples of the companies and a few more so that you understand what I'm talking about when we talk about the moving average. First company on our list is Escorts Limited. Escorts, if you see the company's moving average is this deep blue line. You can easily add it on the screening platforms that you use. I use the TradingView or Zerodha Kite, whichever that you find is nice. Use and add the 52-week simple moving average there. Now here you will see that the company's share price of late from 2020 has been above the moving average of 52-week. So if the company's share price is above that and the trend of the company's share is strong, we without any doubt invest in the company for long term. And you can book profits on this company as well the moment if the company's share price falls down. Like let's say if you see in July 2018 or 2019, you'll see the company's share price fell down below the moving average of 52-week. You could have booked your profits here as well and waited for the company's share price to again go above the 52-week moving period. And then again from 2020 July month, the company's share price started its upward movement from 700 or 800 rupees a share to 1400 and 1500 rupees a share. This rally only happened after the company did profits and the share price went above the moving average. This is important, and use this when you want to analyze. Let me show you a few more examples. I'll show you quickly Asian Paints. Asian Paints, if you see from July 2018, the company's share price has been above the moving average. More or less, this is a very stable company giving great returns to its investors. And if you see, if you invest anytime during this period, you would always make money in this company. Now, if you talk about Adani Green, which is interesting because Adani Green, if you see, Adani Green had its rally very recently. It wasn't a company which was always in a rally. From 2020 March, the company's share price went from 120 rupees a share to 1400 rupees a share continuously because of the momentum which I spoke of. The company was trying to lower its losses and it was doing it from 2019 itself. So the company's share price was reflecting that. But the major momentum in this company happened when the losses were very little, only 23 crores. And the moment it turned positive or profitable, the companies zoomed all the way from 120 rupees to 1400 rupees a share. This is why I always say, always pick a stock which is presently in profit. Always will give you amazing returns in the stock market. And the last example, let me show you again so that you see companies in downtrend as well. This is a company which is called Mindyourinvestment. It is a very famous company in the automotive ancillary space. If you see, the company's share price went from 160 rupees at the moment it crossed the moving average 52-week, and it fell down to 60 rupees a share. Recently, since 2021, the company's share price has again going up. But overall, if you see, the trend of the company was in a downtrend. So unless we see a positive trend coming into this company after a small bit of consolidation, like let's say it could happen in the next couple of months, after that the rally starts in this company would be an ideal option for us to invest in it for long term. Now if we quickly look at the checklist, then we see that Escorts has a positive trend, Asian Paints has a positive trend, Adani Green has a positive trend, and Mindyourinvestment has somewhat of a negative trend like we saw in the charts. Moving average wise, Escorts is above the moving average and all the companies otherwise are above the moving average. So in the checklist, only Mindyourinvestment doesn't make it because Mindyourinvestment just is recently coming out from a downtrend. So after a downtrend, there has to be a phase of consolidation for it to start a new trend, which is not being seen in Mindyourinvestment. So we wait for that. Otherwise, all the other three companies are in the green checklist. So now we enter the short-term criteria of our checklist, and the first one is the quarterly checklist. Now it is again very similar to the profit and loss checklist. We have to make sure that the company is presently not making any loss, because if the company is making losses, we automatically know that this company is not suitable for investment. Again, the conditions are same. Quarterly sales growth should be above 10%. Quarterly profit should be above 10%. This helps us to verify if the short-term momentum of the company is stable enough for investment or not. This is the criteria that I personally use a lot if I want to take a swing trading position in a stock. So I follow this blindly. Now let me quickly show you the examples of the companies that we want to analyze. Here you will see that we have the three companies that we always talk about. One is Escorts, the other one Asian Paint, third is Adani Green. So here we have to see the current quarterly results. The quarterly results for June 2021, the sales is at 1702 and the profit is at 178. Now what we have to do is we have to compare this with the year-over-year figures, as in compare June 2021 with June 2020. So if we compare it like that, we see that the company's profit increased 2x or almost doubled in just a year's period of time, quarter-wise. This is a very positive sign for investment in any stock. If the company is making double growths every year, which is tremendous, then we definitely invest in the company. Although this could be because in June 2020 the company had the COVID phase going on, that is why sales were poor. But otherwise, if you see companies where the company's profit are growing above 2 digits and northwards of 50%, then you should definitely consider investing in them for short term only in the quarterly result basis. Now if we compare it to March 2021, the company's profit in March 2021 was 265 crores and now it is 178 crores. So quarter over quarter basis, the company's profit fell by a big margin of 100 crores. But this company is a seasonal company. If you see the company's overall structure quarter wise and month wise, this company sells most of its tractors during the winter season, which is the agricultural season of India. So that is why sales generally happen then. But otherwise the company's profit fell a bit. But overall, if you see the company's trajectory in terms of yearly growth and quarterly growth, the company is doing well. So we keep this as a green checklist for our company. Second, if we compare it with Asian Paint, here we'll see that the company Asian Paint had a sales of 568 crores in June 2021. In March 2021, it was 852 crores. So quarter over quarter basis, the company's sales fell a bit. Again, this is a seasonal company. Every people do not paint their house during the monsoon season, and March 2021 was the period, the last 3 months, where the winter season, so most people did painting then. So that is why the sales of the company will always be higher in those winter periods for companies in the paint sector. Now if we compare it with June 2020, the company's profit doubled. It went from 218 crores in June 2020 to 568 crores. More than doubled is what we can see, rather 3 times company's profit almost increased. So this is something that again is a great sign for investment in any company. Again, because it was locked down in June 2020, the sales had to increase. But overall, these companies do very well in terms of pandemic situations as well. Now if you look at Adani Green is a company which had a profit of 45 crores in June 2020, and in June 2021 it was 219 crores. This company, remember, was a loss-making company before that. So a company becoming profitable and giving great profits is a sign for investment. And short-term wise, if you see, the company's profit increased 4x year-over-year period, and quarter-wise the company's profit increased from 105 crores to 219 crores, which is double. So it is obvious that the company's share price reflected that, and the company's price went from 120 to 1400 like I showed you. This is why it happened. If you see tremendous growth in company's profit, more profit is going to come to shareholders in terms of price going up or dividend, and that is why people invest in profit making companies more, and they are very confident in investing in such companies. So overall, if you see the quarterly checklist, all the companies in this list qualify in the quarterly checklist, and they are very nice for investment for short-term basis just based on these numbers. Now we talk about the short-term technical factors that we have to look if we want to swing trade in a company. Now here the condition is very simple. All stock needs to have a trend, and we wait for an entry after a consolidation breakout. This is very important. Consolidation phase plays a major role when you want to invest in a stock. If there is a consolidation zone and after that there is a breakout, that gives a strong validation that a new trend is going to sustain, and that is why I personally look for consolidations. Range bound happens on a stock once every year, so you have to wait in a stock for the range bound period to happen, and after that if you invest, the chance of you making money in it increases substantially. So that is what we look for in a stock, and this is what we'll show you in examples. Now here you'll see the first company is Escorts. Escorts, just in this chart alone, if you see, was in a downtrend, and after that it was in a phase of consolidation from April this year to August almost. Now the entire orange zone that you see is a zone of consolidation or range bound. Once the stock crosses this zone with volume, if you can see that or spot that, that would give us a bigger confirmation that a new trend is going to start. So here you'll see just around this big candle that you can see on the end of August period, there was a big candle of green, and the company share price also went above the 52-week daily chart here. And then if you compare it, the company's share price went up to 1300 from 1225. So this is a new trend that is happening in Escorts. So this could be an ideal entry point. Keep this in your watch list and see whether this happens or not, whether this company achieves its targets or not, because this is one of those stocks right now that is showing momentum in the upper side. Now if we talk about Asian Paints, Asian Paint was also in a consolidation phase in this year from February to May, where you can see the range bound period in between the orange line, and after that with a huge volume you see after the May month or between the May month, we see that the company's share price went up from 2700 to 3300. So 500 rupees share price increase we could see easily in the technical charts with the help of just two parameters. One is breakout from consolidation with the volume, and the company's share price going above the moving average of 52 weekly. This is what we look for. If we take a swing trading position after this happens, you will always make money out of it, and this is my guarantee from Mind Your Investment. Believe me, if you make loss, quickly comment in the section whenever you make a loss, and I'll come and tell you personally that where I went wrong in teaching you or you made an error. It generally doesn't happen. So either way, use this criteria for investment. But if we talk about the share right now, it is already way past the breakout zone. Now we have to wait for the company share price to again be range bound. After the range bound period is done, a new breakout will happen. That is when you take an entry. We do not randomly take entries after the uptrend has started, because if you do, the chance of you making loss will always increase. So wait for a new consolidation and then a breakout for entry. Similarly, if we now look at Adani Green is a company which is in the consolidation phase right now. The consolidation phase is quite big because Adani Group was in a big turmoil recently. There was an article about offshore accounts and whatnot, which caused the share price of all the Adani Group shares to fall. So this company right now is in the range bound section, a big range bound we can see. After this range bound period is over, we wait for an entry and a confirmation, and then we take an entry. Otherwise, we just wait and see what happens in the share. It is not important that you take a position every time in a share. Wait for the right time and take advantage of that to make money in the stock market. And now if we talk about Mindacorp has recently had a consolidation phase, and now it could be starting a downtrend. So this share we avoid, because unless we know the company is going up with a new trend breakout, we generally avoid the share. So we have to wait and watch on Mindacorp to see what happens, but definitely do a full analysis of this checklist on Mindacorp. So overall, if you see the entire checklist that we have, the breakout was recent in Escorts, which is a positive sign. In Asian Paint, it was old. In Adani Green, it is not available because it is in the consolidation phase. And in Mindacorp, it is recent, but the trend is in down. So that is why we do not invest in. So only Escorts presently fulfills the short-term criteria for investment in it, because the momentum right now is very new and there could be a major upside coming just based on the technical factor that we spoke of. So now we come to the interesting part of the video where we show you the target price that we can have from two basic models. One is the EPS PE model, the other one is the Fibonacci model. Now we have made separate videos on how to use these models to calculate target price. They are on the channel. Check both of them out. They are amazing ways. One is for technical analysis, one is for fundamental analysis. And they are so accurate that if once you start using them, you'll understand how accurate they are. So definitely check them out. The link of them are in the top right hand corner and on the description. In this video, I'm just going to show you the target price and the basics that we are using in this calculation. So the growth rate of the company for Escorts, we are assuming 12% because that is what we see in this company going forward in terms of sales. We have done the calculation, and if you multiply that by the forward EPS and average PE, we get a target price of 1462 from this company. Current share price is at 1387. So right now there is a big up move possible in Escorts reaching this target price within the next quarter. After every quarterly results, you do this calculation again and see what will be the next target price. So right now 1462 is what we see till the next quarterly results. Now if we compare it with Asian Paints, Asian Paint had a very nice growth in terms of sales. So we are assuming 20% growth rate. We have done the calculations. You'll learn how to do the calculation in the other video. Check it out definitely. And then we get a target price of 3,307. Current share price is 3,316. So automatically we can see that the company right now is fair valued. So right now for this time we are avoiding Asian Paints because the target price based on EPS model is showing it is almost in its fair value. So we have to wait for the next quarterly results to recalculate the target price. But if you assume a bigger growth rate of more than 20%, target price would have been higher. So we wait for the next quarterly results to come and then we revalue the share with this model and see whether we can invest in it or not. Because right now there is a chance that the company's share price will fall or could fall. It could also go up in the recent times if we assume a higher target price. But we are always conservative investors. We use a conservative model so that we never make an overestimation of our targets. Thirdly, we have Adani Green. Adani Green had a stupendous growth rate. We are assuming 30% growth rate till the next quarterly results. If we do that, we get a target price of 2,266. Current share price is at 1,113. I would not follow this target price for this stock right now because the target price that we have is giving us a much bigger number. Generally, this target price is roughly 90% accurate and based on a lot of the growth rate factors. So for this model, I'm not going to assume this target price because this is too far-fetched till the next quarterly results, but I'm just showing you that this can also be a situation where this might not work. Now we have 10 different valuation models on our website. Check it out. It's an Excel sheet, stock valuation Excel sheet with the Telegram community that in which I am a part of. So we have conversations about stocks, which one can achieve what target. This I would rather prefer analyzing on that platform because that would give me a more accurate number for target price. So just based on EPS PE model, I would right now in the slide give you two green signals for Escorts and Adani Green, but personally I would not invest in Adani Green with this target price in mind. I would only invest in the Escorts target price because that is a more suitable target price. Now if we compare it with the Fibonacci target price, the model that we use for Fibonacci, again it is a very nice way of calculating target price on technical charts. Here we see Fibonacci target giving us for Escorts is 1481. Share price is 1387. So again we see that there is a possibility that the share price will go further up from the current share price. So this automatically fulfills our checklist. Second one is Asian Paints. Asian Paints target price based on Fibonacci model is 3200. Share right now is 3316. So again I would say not to invest in Asian Paint just based on the target price. And finally we have Adani Green. Adani Green is in a consolidation phase, so we couldn't calculate a target price for that. You should watch the Fibonacci video so that you understand when and how to use the Fibonacci to calculate target price. But otherwise, just based on this list, only Escorts is the only share which fulfills the Fibonacci target price criteria. So let's quickly look at the summary of all the things that we've covered so far. This is the checklist that you can see on the screen. Now we have different criterias, like the long-term criteria is the first three, the last two is the short-term criteria, and after that the target price. So from this list, it's quite obvious that Escorts is the only company which is suitable for long-term as well as short-term, and the target price of the company as of today is also quite achievable. If we now look at Asian Paints, Asian Paint is a company which fulfills the long-term criteria very well, where we can see all of them matching up. But in the short-term criteria, only the quarterly profit and loss is nice, but the technical factors and the target price says that the company right now is fair valued. So we have to wait for the stock to fall a bit and then we can take an entry. And now if we look at Adani Green, here we see that Adani Green doesn't quite fulfill the long-term criteria. The debt of the company is very high. Generally in such cases, I as an investor would avoid that. And the short-term criteria also says that the company right now might not be that suitable for investment. So we have to wait for certain things to happen in these companies. But like I said, Escorts is a company which fulfills all the things properly. So if you are an investor, I would suggest you to keep Escorts in your watch list and see where the target price of 1462 and 1481 can be achieved by the next quarterly results or not. And for any stock that you want to analyze, may it be in your portfolio or something that you want to invest in, definitely try this checklist criteria that we've covered from the beginning: debt, yearly profit and loss above 10%, moving average, quarterly profit and loss, short-term targets, all of them. You do an analysis and see which stock you should choose for long-term and which stock you should choose for short-term. Let's say if you want to invest in a company for just 6 months, then you should always look for the short-term criteria to be fulfilled along with the target price. For long-term, the first three criteria is enough for you to invest in a stock. However, I always suggest that you keep a track of the target price as well, so that you know how much the company can go forward and you do not take an entry when the share is overpriced. So that is why it is important that you look at all the criteria. And don't forget to check out our stock fundamental analysis Excel sheet, and along with that the stock valuation Excel sheet, which is amazing, the best possible Excel sheet in our India, I would say, because I'm that confident, and my viewers who use that, the users who use that in the Telegram community, can definitely vouch for the authenticity and the accuracy of our stock valuation Excel sheet. So I'll see you guys in the next one, or on our Telegram community if you buy that, and we can discuss more about that there.